You're listening to Ron Siegel's Home and Finance Radio Show, only on Financial News and Talk. Now live in studio, your host, local and national real estate expert and consumer advocate, Ron Siegel.
And hello again. Welcome to Ron Siegel Radio. This is the show with no real boundaries as we discuss current events, financial markets, politics, sports, even poking fun at the rest of the media. This is the show that connects the dots of confusion delivered by conflicting media reports. We connect the dots so you know the actions you can take how your family or business can benefit from current events. Most of all, thank you for joining me. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day. We have a very focused show. We only chat about items that affect the roof over your head, your bank account, and anything I feel would benefit you. But before we get into our intriguing content today, please join me in welcoming our featured guest and repeat offender on Ron Siegel Radio. Mary Walters is in the house. Welcome.
Good morning.
Glad to have you with us. And let me remind you, if you ever have any home or finance-related questions, I am the consumer advocate looking out for you. And you can reach out to me directly, 800-306-1990, 800-306-1990, or ronsiegelradio.com. Just remember, that's the number you call anytime for assistance. When you call that number, it comes directly to me first. There are no operators standing by. I am it.
Quiet, numbskulls, I'm broadcasting.
While they do have a great team when it comes to developing a financing plan, a plan to save you money, I personally work with you. Even if you don't have any needs today, save this number in your phone for future reference, 800-306-1990, 800-306-1990. And yes, of course, we are celebrating today. We celebrate every day on Ron Siegel Radio. Let's take a look. I don't know where we want to even begin today because there's so much good stuff to celebrate. Blueberry Muffin Day. Okay, Rose's Cafe. Have you ever been to Rose Cafe? Ever been to Rose Cafe?
Never heard of it.
Corona Del Mar, great little cafe right there, bakery. Some of the best donuts in the whole world, but they make a great blueberry muffin. So if you're in the area, stop by Rose Cafe. You said you're going to make a beach day, so there it is for you. Corona Del Mar. Let's go National Rainier Cherry Day. Those are just plain old cherries. The Rainier cherries, they have the yellow going through them. But those look good. We'll go with those are good looking cherries. Nice. And Mojito Day. I don't know. I'm not much of a mojito person. You a mojito person? Yeah. Okay. Well, then I guess we can just have to stick with, we don't have a slide for this one, but today is 7-Eleven Day. Now, usually on 7-Eleven, I don't know if they're still doing it because, everybody's got a complaint about everything nowadays, but it used to be you could go to 7-Eleven, the convenience store, and get a free Slurpee on National 7-Eleven Day. I don't know if they're still doing that. Are they doing it?
They are. I heard somewhere else though that you have to have the app downloaded. You can't just walk in to get one. You have to have the app now.
Oh, really?
And I don't know. Don't quote me on that. That's just what I heard.
I got a bad feeling about this.
Yeah, I don't know about that one. That's but everyone's got it. They want to trace us for everything. They want to track us on everything. So get the app, get the free Slurpee if you can get one. I'm not promising. I don't know. And then take the app off your phone. Maybe that's what you want to do. The only app that you really need to make sure you keep on your phone at all times, because you never want to miss this one, ronismylender.com. You can go and grab our app. It's one of the best in the mortgage world, ronismylender.com. So check that one out. Keep that one on your phone because you'll want it. Let's take a look at what the markets are doing today. The Dow Jones Industrial Average down 133 points. The S&P 500 is down 43 points. The NASDAQ is down 239 points. Ooh. Ow! Oil down $1 a barrel. Do we want to look and see what it's doing? $1 a barrel. Okay. 609 in California. I paid $5.80, I think, yesterday at Costco. So $5.80. So 609 in California. Josh, you're at $5.40. Way better than we are out here. 502 is what Jody's paying. Lori had to leave Nevada to go back and fill up her car with gas, so she's back in Louisiana at $4.22 a gallon. $4.22. Of course, I wonder what they're paying for gasoline in China now that Joe sold them 1 million barrels of our oil. I shouldn't go there, but I digress. That's a whole different story. A lot going on in the world. Hey, you know what? Every once in a while, I like to bring a case study to you. And this one just so happens to be a case study. I don't know about this comment here, but that's a Twitch comment, Josh. I don't understand Twitch, but I don't know what this has anything to do with anything even. But I move right along. So, do you know Twitch?
No.
Okay, good. So you and I are the same.
Yeah, I'm getting old, apparently.
You didn't have to put it that way, Mary, but okay, I'm already there, so I guess you're getting there. So, but we'll talk more about that later. It's a whole different subject. But I like to bring a case study every once in a while because I hear so many people that have a major concern over what's going on in the interest rate market, and you should. But here's the issue: is I want to share with you that always, I've said this for years and years, strategy beats rate always. Strategy beats rate always. So if I said to you that an $875,000 purchase price, maybe, and I don't know where interest rates are today, so I just threw in a placeholder. I use 6.5%. It may be lower. I know rates have gone down a bit today, so it's probably going to be lower than that. But I threw in this 6.5% rate. And I just want to throw this number in there. Educational purposes only. I'm not making any offers to lend money. But think about this. So you got a 6.5% interest rate, $875,000 purchase. What would a seller say if you said to them, I don't want to pay you $875,000? Would you accept $920,000? It might open up some ears. And would you mind helping me with my payments a little bit? It's not going to cost you anything. That extra $45,000, can you help me with my payments with that? Strategy beats rate. Now we can bring the interest rate down to 4.75%. For those of you scorekeepers and compliance people out there, it's 5.338 APR. Now, here's the issue. The down payment is going to stay the same. The cash to close is going to stay about the same. No difference there. But the payment drops by $538 a month. $538. So cost the buyer nothing, the seller nothing, because we've increased the purchase price to cover this. The buyer is saying, oh, something, I'm saving $538 a month. And they might look at it and say, but I had to pay $45,000 extra. I'll get there. $49.07 a month is now the payment instead of $54.45. That's principal, interest, taxes, insurance. If there's an HOA, I didn't include it because I don't know if there is one. Now, a couple of issues we have to consider. What if the appraisal doesn't come in? Well, we've already considered that. Remember I told you the original asking price was $875? What if the appraisal comes in at $828? We've got it covered. We're going to keep the loan amount the same. We're going to keep the interest the same. So guess what happens to the payment? It's the same. The cash to close goes up by about $1,000, not a whole lot. Still saving that same $538 a month. Significant savings for the buyer. Buyers are mostly concerned with what's it going to cost me on a monthly basis. So now you're looking at this 4.75% interest. Again, I'm not saying that's exactly what you get. It'll probably be lower than that. But the whole issue is saving this money. Now, think about this. What does that mean in the long term? Well, would it surprise you to say that if you stayed in the home for 15 years, if you kept the mortgage for 15 years, you're going to save about $156,000. $156,000 in interest saved over the first 15 years. Think about that. Now, what if you said, I can afford that higher payment? Well, put the money toward the higher payment and you're going to save even more. The bottom line is strategy beats rate always. And there's a lot of folks out there that are just saying, something, I'm just going to look for the best rate. And they don't understand that, maybe the best rate with the worst strategy is not get you exactly where you want to be. Think about that concept. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, the drop in mortgage rates brings good news for home buyers. We've got the old man and millennial outlook on the market today. I've also got a Borrow Smart segment. Good news for the economy. All that and more. You can reach me anytime. Our off-air number, 800-306-1990, 800-306-1990, or RonSiegelRadio.com. Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube. Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio, your home and mortgage connection.
Is your budget getting blown up with high prices of gas and increased costs for other household needs? This is Ron Siegel, host of the daily Home and Finance radio program. Did you know if you have a low interest rate mortgage along with auto debt, credit card debt, or student loans, your family could potentially save $500 or more per month by restructuring these debts? If you'd like a free Borrow Smart analysis with our team, let's book an appointment to see how we might be able to relieve some stress. Schedule an appointment at rsrbsa.com. That's rsrbsa.com for your free Borrow Smart analysis. rsrbsa.com.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The Mortgage Minute today being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the program and the product. You just need to call 800-306-1990. S&P 500 now down 40 points. Mortgage-backed securities are up 31. The 10-year Treasury is down 12 basis points. Again, mortgage-backed securities being up 31 means interest rates are falling. But let's see what they tell us from our friends at OBMMI. They provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates with consumers across 35% of all mortgage transactions nationwide. Where did the loans close or lock at on Friday? Obviously, Friday's data is a little older. 30-year, 5.829 on the conforming, 5.269 on the jumbo. The FHA loan, 5.653, 30-year VA loan for the people that get the best rates, the best program. They earned it. That's our veterans, 5.396. The USDA loan, rural areas, 5.599. All good and all well and good, but why is it happening? That's what we always look for. Well, there's a lot of news out in the marketplace talking about more interest and real estate and what's going on in the real estate world. And we're going to share a couple of slides that we have for you talking about what's going on in real estate. And Josh, if you can bring up that first slide, if you're watching us on RonSiegelRadio.tv, the ABC News and Talk AM 1490 video feed, you can see all of these things. Selling above asking price as of this is as a survey conducted that finished July 5th. So it's very, very new. The interest rates were a little bit higher. Those properties selling above the asking price, 52% of the properties. Average percentage of price sold above asking, 1.9%. Accepted offer, first 2 weeks, 32% was within a week, but within the first 2 weeks, 48%. Average list to contract time is 18 days. That's what's going on right now in the market. Again, this is just data that's, 6 days old. But how does that compare to last year? Well, a year ago, selling above asking price was 53%. Now it's 52%, so it's basically the same. Average percentage of price sold above asking, this year 1.9, last year 2.2. Accepted offer within the first 2 weeks, 48% this year, 49% last year. Average list to contract time, 18 days, both. So kind of surprised me when I saw these stats come out. What do you think? Do those numbers surprise you as much as they surprise me?
A little bit, yeah. I would have thought that last year's number was gonna blow that out of the water a little bit.
Yeah, I would have expected that, but those are the numbers where they are.
Those are the national numbers?
National numbers. Yeah, I think that came from the National Association of Realtors. So just a little bit of what's going on in the market. So when you hear the basic bottom line on that is when people tell you that housing is crashing, housing is not going up, ask them what part of the world they're from. Now, we are seeing some changes, but we're not seeing radical changes. Just be aware of that. So don't get caught up in some of the hype. Some of the people that are saying, well, the earth is caving in or anything along those lines. Now, I don't know. You might see one other area in the marketplace. I found this one a bit interesting as well. Car repos exploding. Most are on cars bought during 20 and 21, where loan to value ratios are around 140%. Guess you shouldn't be borrowing more on the car than it's worth. Much higher than the normal 80%. Many of the loans were extended to buyers who had temporary income increases during the pandemic. This could alleviate some of the inventory issues. Not in a good way. You get car repos are coming back, and I'm not sure that that's the way we want to get the inventory in line. But it is a big market, about $1.5 trillion. People try incorrectly to make comparisons to the housing market, which is much different. The average loan to value on homes is 42%, which means that customers have 58% equity in their home. So not going to walk away from the home as quickly as you might walk away from that car. Just throw that in there. That's the Mortgage Minute, brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make a call, 800-306-1990, 800-306-1990. Every month at this time, we are fortunate enough to have Mary Walters, Realty Pro 100, come in and join the old man here to talk about what's going on in the marketplace. Special week for Mary, though.
What was that?
I think that one's a little short, Josh. We need a little longer clip, I think. I don't know.
Like you're announcing a queen or something.
It was good. It came into me, Josh, at 1 second. So I don't know if there was more that I blew there. Let's see if Josh can. First person that can give us within a 1 second that can tell us what that clip is. You know, maybe
Becoming Queen of England.
Yeah, Josh, I just re-uploaded it. Try it for the next segment. We'll try and bring that back and see if we can get that one in on the next segment. Let's start looking at the monthly market report with Mary and see what we have to say. Recession fears surge among CEOs, according to various surveys. Some say we're in a recession or we'll be there in the next 18 months, according to a new survey. Blah, blah. What does that mean to you? Right? Do you care?
No.
Okay, so we can move right along off of that slide and see what we get there. But the bottom line is real estate values increase in a recession, and after the recession is going a little while, interest rates go down.
Yeah. And I mean, if you listen to any like financial like analyst or whatever, they always say like most millionaires are made in recessions. Like it should be an exciting time.
Yeah, exactly. That's an interesting way of putting it. According to the mortgage specialist, I wonder, it's like an anonymous sources say. Throughout history, during a recessionary period, interest rates go up at the beginning of the recession, but in order to come out of the recession, interest rates are lowered to stimulate the economy moving forward. Historically, we have seen a repeated uptick in interest rates followed by lowered interest rates, basically saying the Federal Reserve is going to increase interest rates all the way until we get into a recession, and then they say, uh-oh, and they're going to lower them down. Yeah, we went too far. Unbelievable. Okay, so mortgage rates and recessions, they kind of, we've got anything you want to see that we're talking about here, we've got a chart for everything. And we also source every chart that we have. So you watch these during our breaks. If you're watching us on ronsiegelradio.tv, any of our socials, the ABC News and Talk AM 1490 video feed. During our breaks, we run a reel with all of these different charts. And you can actually see where the interest rates, they go up, and just as I just said, during the recession, and then there's all kinds of fear that we're in a recession, the earth is caving in, and we better lower interest rates to get the economy going again. What does that mean, though, for real estate? Right, so buy when you want to, because you can always change your loan.
Oh yeah, definitely.
Right, it's simple. So don't worry about where rates are. And I've been using this line along quite a bit lately. And it's kind of fitting. I'm going to be going to 5 weddings in the next 8 weeks. So marry your property. date your mortgage, right? You can change dates anytime you want to, right?
Mhm.
So it becomes a lot easier. So I'm just throwing that out there for you. Mortgage rates and recessions. Anything pop out to you on this chart of all these? You know, the length of the recession. So in 80, the recession was 6 months. In 81, 82, it was 1 year, 4 months. The 90s, 8 months. Early 2000s, 8 months. Great Recession. We don't count that one because it was caused by real estate. COVID-19 recession, 2 months long. Right? That was a long one. So we're out of that one. But you look at it and you say, okay, mortgage rates dropped every time.
Mhm.
I mean, I'm looking at all those. Even during the Great Recession, we went from 3.8 to 2.8. You say, well, it's only at 1%, Ron, but that's a 25% drop.
Yeah.
Big drop. So recession means historically interest rates are going down. Over the past 5 recessions, mortgage rates have fallen an average of 1.8 percentage points. That's the important part. So they've dropped 1.8.
Yeah, that's huge.
Yeah. So if we're, say, 6 right now, that means we're headed to 4.2
Mhm.
based on history.
Yeah.
And that's going to give us a lot more buying power.
Oh, definitely.
So when we have a lot more buying power, then prices tend to go up or down. Up.
Yeah.
Right? So and we're going to talk about, the basics. We get the real basics of supply and demand here, but recessions. So you and I have talked about this one before.
Mm-hmm.
Now, okay, so I threw it at you last time, unannounced, that I didn't believe that 19.7 mattered.
You did.
And what are your thoughts now that you've had a little time to digest?
Honestly, I don't even remember that conversation we had.
Jeez. I guess I stand out really well here, don't I?
But no, because I mean, in that it was the housing that led that recession. So it really is an anomaly on that chart.
Yeah, so it's not a big deal. So basically the chart says that recessions don't equal housing, doesn't equal a housing crisis. So my world, in 1991, real estate went down 1.9%. It's the only recession where we saw real estate values drop. And most of the time they're up big.
Yeah, and a 1.9, that's nothing.
Yeah. I mean, when you think, and that's a national number. So here in Southern California, we may not even see that much. So the bottom line here is, are we in for we're going into a recession. Is that good or bad?
Depends on how you look at it, but
for the most, now, I mean, I get it. If you're with one person, or, the people that lose their jobs during the recession, it's bad.
Yeah.
But if you're thinking about buying, selling, borrowing on real estate, creating wealth.
Yeah, it's a good time to make money.
Good. There you go. It's a good time to make money. And we're going to continue that conversation. We've got an inventory update is the next thing that we're going to come to on the monthly market report. And I'll also talk about the drop in mortgage rates, bringing good news for home buyers. We got good news for the economy. It's a good news kind of day, maybe a good news kind of week. You can reach me anytime. Off-air number 800-306-1990, 800-306-1990, or ronsiegelradio.com, facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube. Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
How's that audio? Is that audio a little better? Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The Real-Time Real Estate segment today being brought to you by the area trusted real estate professionals of Ron Siegel Radio. Visit rsrhomescout.com, rsrhomescout.com. The drop in mortgage rates brings good news for home buyers over the past few weeks. The average 30-year fixed mortgage rate from Freddie Mac fell by 0.5%. The drop happened over concerns about a potential recession. And since mortgage rates have risen dramatically this year, I'll say, home buyers across the country should see the decline as welcome news. Freddie Mac reports that the average 30-year rate was down to 5.3% from 5.81 2 weeks ago. Remember, that's conforming rates. That's not high balance loans. And it's with all the perfect scenario. And you probably have to pay, in this case, Freddie Mac's about 0.9 of a point, almost 1 point to get that. Mortgage rates dropped by 0.5 from June 23rd, 5.81, June 30th, 5.7. And July 7th, 5.3. But why is this recent dip such good news for home buyers? As Nadia Evangelos, senior economist and director of forecasting at the National Association of Realtors, explains, quote, according to Freddie Mac, the 30-year fixed mortgage rate dropped sharply by 40 basis points to 5.3%. As a result, home buying is about 5% more affordable than a week ago. This translates to about $100 less every month on a mortgage payment, unquote. That's because when rates go up, they impact how much you'll pay in monthly mortgage payment, which directly affects how much you can afford comfortably. The inverse is also true. A decrease in the mortgage rates means an increase in your purchasing power. If you want a chart of purchasing power, just give me a call at 800-306-1990. I could put any loan amount in there or purchase amount, and it'll give you a chart of where your purchasing power goes. And I can send that off to you, rj@ronsiegelradio.com. rj@ronsiegelradio.com will get that to you. Bottom line, if your home doesn't meet your needs, this may be the opportunity you've been waiting for. Let's chat about it. And as always, I ask if you have any friends, family, or coworkers looking to buy, sell, or borrow on real estate, can I count on you for the introduction? That's the Real-Time Real Estate segment, again, brought to you by the area trusted real estate professionals of Ron Siegel Radio. Visit rsrhomescout.com, rsrhomescout.com. Let's see if I can get a clip. Mary Walters is with us, Realty Pro 100. See if we can get this one. This one's 14 seconds, so at least it should be a little better.
Surprise of her life, huh, Gaston?
Yep, this is her day. This is the day your dreams come true.
Gaston.
The day your dreams come true.
And my new name, Gaston.
And your new name. I had to bring that one in there.
Yeah, there you go. That's much better.
The last time Mary Walters will be on the show with me.
Yeah.
Mary Gaston.
Mary Gaston.
Starting what, in a couple of about less than a week?
Yeah,
next
days.
Monday, it's gonna all change. Saturday.
Saturday.
Nice. Okay. Another one bites the dust. I can say that.
Hey, there's still time to run. Okay.
There's still right. Exactly. There's still time to run. I can't. I mean, I'm 35 years into a life sentence, so it's a little different here. Let's get back to the monthly market report with Mary. Inventory update. So you're on the front lines. I'm just here looking at stats and data and numbers. Offers received down.
Mm-hmm.
Are you seeing that?
Yeah, I mean, it's definitely not the frenzy we were in before where, there's 30 offers on every property. So offers are definitely, I think, a little bit slower to come in.
Now, you only need one, right?
Exactly.
So if you get 30 or if you get 5, you're still in good shape.
Yes.
Offers over asking price.
Mm-hmm.
What are you seeing?
Yeah, they are not as crazy high. Like, are we still getting offers over asking price? Yes.
Okay.
But not in the way we were before.
Is that because sellers are coming back to reality and not going crazy with their listing price? Or is it just because, people are more fearful, or what's the...
Yeah, I think everyone finally realized, hey, we've already hit the peak. Like, we can't just throw a number on the board and think we're going to get, $100,000 more than that.
Sales are down.
Mm-hmm.
Are they? Not are they? Not are they? Are they? Are they not? What are you seeing?
Yeah, they definitely are, especially in the local numbers. They're down.
Okay, and here's a stat that I saw, Mary. This one isn't even in the report. For the U.S., And I know that there's people in your office that track this very, very closely.
Mm-hmm.
In the U.S., 60,000 homes that were in the that went into 60,000 homes that went into contract in the month of June canceled.
Mm-hmm. There have been a lot more cancellations.
14.9% of all contracts for the month of June were canceled.
Mm-hmm.
That's something new.
Yeah, we've been seeing a lot more cancellations too.
Why?
I think for the most part, a lot have been due either just financing with the interest rate shooting up, or appraisals not coming in where they're supposed to be in, just people not having the cash to cover the difference.
So the question that comes up in that, and I don't know if you know the answer to this, because I know that there's a different answer for everybody.
Mm-hmm.
Do they not have the cash, or do they not want to even try because they're worried about, maybe am I overpaying?
Yeah. In the scenarios I've seen, the appraisal gap seems like it's been so big, both the buyer and seller, like they just couldn't come to an agreement to
And that's a big issue right now, because what are the appraisers going to do?
Mm-hmm.
Right? Because they're hearing the doom and gloom out there.
Yeah.
And they don't want to be over appraising. So are they going to get too conservative on us?
Mm-hmm.
Now, if you remember, if you missed it, shame on you. But in the first segment, I shared how you can get around that appraisal gap. We have a solution for that. And if you can't afford the financing, we gave you that solution too, because not only does that work if you're going above the asking price, it works if you're trying to negotiate to get down the price down somewhere for both parties. Just throw that out there for you. There's been a pickup in inventory that we've seen recently, but it's not from a big increase in new listings, but rather a slowdown in the pace of sales. Remember that month supply measures the inventory of sale relative to the pace of sales. Same inventory, fewer sales means more month supply. That's according to Mark Fleming of chief economist at First American. So looking at the monthly inventory, does that tell you anything on there at all, Mary? We got a slide here that shows January 1.6 months, February 1.7, March 1.9, April 2.2, 2.6 in May.
Mm-hmm. Yeah, we're slowly shifting back into more of a balanced market.
And I like the way you put that, because it's we're not nowhere close to a buyer's market.
No.
We're not even close to a neutral market.
Mm-hmm. Exactly.
It's getting close to balanced.
Yes.
Right? That's a big, big issue right there. New monthly listing counts. So here's the issue, because we a lot of times we look year over year.
Mm-hmm.
I'm going to submit that's not really a fair analysis right now. 2021 and 2020 were not normal years.
Yeah, you really need to compare like 2019.
Exactly. So we have a chart here that does compare. So new listing counts in 2020, 2021, 2022, we're seeing slightly more listings than we did in 2021. But again, 2021 was a great year.
Yeah, but I still don't think it's anywhere close to where we were in 2019.
I think you're right. We're going to get there, I think. Existing home sales, seasonally adjusted 2022, we're looking at 5.4 million. Now, think about that number. You look at it, the media is going to say, well, last year was 6.1 million. Now we're at 5.4.
Mm-hmm.
But let's look at reality. What was 2019?
5.3.
5.3. So we're ahead of that. 2018.
5.3.
We're ahead of that. 2017.
5.5.
So we're pretty close.
Mm-hmm.
Right. So we're pretty much back into
right on the average.
Yeah, we're right on average numbers right there. So it doesn't really have much, we're not learning anything, but the media is not going to tell you this. I promise they're going to come out and say that home sales are way down over an anomaly year.
The sky's falling.
Exactly. Home sales have essentially returned to the levels seen in 2019 prior to the pandemic after 2 years of gangbuster performance. So we're still doing great. Active inventory continued to grow, rising 21% above 1 year ago. In other words, we're starting to add more options, but the market needs even more before home shoppers have a selection that's roughly equivalent to the pre-pandemic numbers. Now, people out shopping. Is it easy to find something?
It's easier than it's been the last 2 years, but no.
Still tough.
Yeah.
You still have to work to find a house. You have to still work to spend $1 million.
Exactly.
I mean, just $1 million doesn't go as far as it used to. It's just the bottom line. Forecasted update of inventory. Okay, the original forecast was for the inventory to go up by 0.3%, but it's gone up 15%.
Well, that's their updated forecast, right?
Right, updated forecast. So they think that they got it wrong. That's realtor.com.
By 15%.
Yeah, by 15%. Okay. And then we should listen to them now. Doty's Law. If they say they got a 40% certainty, they know nothing. We should start to see less competition, fewer bidding wars, therefore less upward pressure. In fact, a simple analysis shows that a 1 month increase in the month's supply results in a 3% decline in annualized house price growth. And our preliminary house price index is already showing moderation in house prices in April. That's again according to Mark Fleming. So the question becomes, should you buy right now? What do you think?
Well, I'm buying right now, so
You're
I
buying
hope so.
So here's what the headlines are telling you. Finance housing, the cooling housing market enters into the great deceleration. And we've got Liz Hughes, June 2nd. Home prices decelerate as the housing market downshifts. Maurice Beckman, the motley fool, buying a home at the wrong time can backfire big time. Here's why it may pay to wait.
But to be clear, they said deceleration, not
Right.
decline.
Decline. Exactly.
There's a difference there.
And pay to wait. Really? Decelerating home prices do not mean depreciating. Right? And pay to wait. So I love this slide because it gives us all kinds of forecasters. We've got Fannie Mae. They've got a vested interest in what the prices do. Freddie Mac, they have a vested interest. CoreLogic gets it wrong always. Home price expectations survey. They're the best survey out there. They take 100 plus economists, and they're from academia, they're from business, finance, real estate, a whole breadth of groups. They come out there and they give us their forecast. National Association of Realtors, Zelman, and the Mortgage Bankers Association. Forecast for 2022, again, home price expectation survey says 9.3%. Halfway through the year, I don't see how we could possibly miss, being in the high.
And that's still higher than the normal 5 to 6% appreciation.
Right. So it's still dramatically higher. So we're going to talk more about this when we come back. Estimated home performance, we'll get into that. And what's driving this housing market? Why is it such a tight housing market? We're going to talk about that as well. You can reach me anytime. Our off-air number, 800-306-1990, 800-306-1990, or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube. Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Is your budget getting blown up with high prices of gas and increased costs for other household needs? This is Ron Siegel, host of the daily Home and Finance radio program. Did you know if you have a low interest rate mortgage along with auto debt, credit card debt, or student loans, your family could potentially save $500 or more per month by restructuring these debts? If you'd like a free Borrow Smart analysis with our team, let's book an appointment to see how we might be able to relieve some stress. Schedule your appointment at rsrbsa.com. That's rsrbsa.com for your free Borrow Smart analysis. rsrbsa.com.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. What are we doing here, Josh? The Borrow Smart segment being brought to you by the National Finance. Is it Monday or something? National Institute. Yes, please. National Institute of Financial Education. My screen is going wacko here. It's bringing in all kinds of goofy stuff, and I can't get to anything now. So let's see if I can find it over here. Let's see if we've got this. There it is. Okay, so good news for the economy. When you look at the overall strength of the borrow, their debt as a percentage of income is the lowest in measured history. So we've got a chart that I'll share with you later on. but we're down almost at about debt payment as a percentage of disposable income. It's about 8.5%. Back in 2008, we were at about 13%. So big strength there. That can be seen in lower delinquency rates on all outstanding loans and across the spectrum, mortgage, auto, maybe not those used cars that I was talking about earlier. That might be a little bit of a problem still. But the delinquency rate on all the loans, this stability emboldens the Fed to keep raising interest rates. And one thing that would bring that to a slow more quickly would be a problem with jobs. While the economy is slowing, we can see that we are at an all-time high for the job openings, with 2 jobs open for every 1 person looking for a job. That will also make it easier for the Fed to keep increasing interest rates. So we do have a lot of stuff going on there. So be aware. Just watching these jobs. Now, remember, recessions start not when the unemployment is at a high number. Recessions actually start when unemployment is at a lower number. So just be aware of that. We're watching these numbers very, very closely to make sure we see where some of these numbers are coming in at. So just watch the numbers, and we'll keep watching them for you. That is the Borrow Smart segment. Again, brought to you by the National Institute of Financial Education. Ooh, easy for me to say. I'm going to get back to let Mary do the talking here, because it's obviously I am having significant challenges in the speaking section today. But Mary Walters is with us, Realty Pro 100. We are going through the monthly market segment as we do every month at this time. Estimated home price performance. Every one of the groups are looking at going higher again, Mary.
Yeah, and there you go. Like, everyone basically agrees that we're going into a recession, and everyone also agrees prices are going to continue to appreciate.
Well, part of the reason for that, could be that maybe we're getting to a point where the millennials are starting to get involved. We'll talk about that in a second. The root issue of what drives house prices almost always is supply and demand. Now, interest rates affect that. When interest rates go up, guess what? Fewer buyers. The demand goes down. That's prices are going to soften and not be as cray-cray. That's a quote from Dave Ramsey. That's technical.
It is.
As they have been. And that's what we're seeing right now. Yeah, we've seen that. But hey, let's take a look at we've got a chart here. Single family housing units completed. And this is what drives this whole discussion. So if you're watching us, well, we don't have this chart on there, but we'll bring it up here. From 1970 all the way through 2005, we were building a lot of houses.
Mm-hmm.
And all of a sudden in 2008, 9, and 10, we stopped building.
Mm-hmm.
But the question becomes, did we stop aging?
No.
Nobody stopped aging. So the second largest generation in history has been the millennial generation. Right? Baby boomers, I think, were a larger generation. But the millennials getting to be, and that's your world.
Mm-hmm.
Getting ready to start buying. Well, you're the anomaly because you started a little earlier than most.
Mm-hmm.
But as you're getting married and starting your own family, want to buy a property.
Yeah. I think there are a lot more people, I think, even my friends, like, coming on, and actually they're getting ready to buy now. So
that's good news.
It's great.
So the issue becomes you got more people coming into the market to buy, and the builders aren't buying. So what are you going to buy?
You mean the builders aren't building?
Builders aren't building. Yes, you're right. It's a tough day.
Yeah.
I think it's time for maybe I need a mojito or something. Maybe it would have been better. Experts don't believe the market is in a bubble or a crash is in the cards like during the Great Recession. The nation is still suffering from a housing shortage that has reached crisis proportions at a time when many millennials are reaching the age when they start to consider homeownership that's likely to keep prices high.
Yeah. All the millennials are either living in vans or they're buying homes right now.
They're living in vans?
That van life,
I did see a picture about that just recently. That is kind of funny. So, and I think that's pretty common though, because that period of time, by the time you end school, whatever that might be,
mm-hmm.
and get ready to start the next phase of your family life, go out there and have a good time while you still can.
Yep.
Okay, so we're watching all of those things. Home sales, let's take a look at that chart and see if I can possibly see that. Average days on the market in May. You look at these days on the market. Even during the crazy times of the 2020 and 2021, I'm still looking at it and it still looks to me like we're still doing pretty strong on there.
Oh yeah, that surprises me.
Yeah, it's a little.
These are the national numbers, so.
Yeah, it is national. So yeah, that's a good point. So I do look at these numbers as national. Mary's able to give us insight on what's going on local, which is really more important than national numbers. Let's take a look at the next one here. Existing home sales. Well, this chart actually shows existing home sales are slowing a little bit.
Mm-hmm.
Do we believe it?
Yeah.
Okay. So Mary says yes. So who am I then to? by region. Existing home sales year over year by region. West is down 10%. That seems like a big number to me.
Mm-hmm.
Do you think it's down that much?
I believe it.
Okay. You're on the front lines. Existing home sales 2020, 2021, and 2022. So the charts are still showing that, we're still strong.
Mm-hmm.
But, again, do we really want to compare to anomaly years?
I don't.
No. The anomalies just, they don't work very well in the whole process here. So we don't really want to compare to anomalies. We look at it, but the bottom line is we're not buying, and even when we compare to reality, which I would say is 19, mm-hmm. we don't have an opportunity to buy in 2019. We have to deal with where we are today.
Yep.
And we have to spend a little bit of time on that part of it, Mary, because that's interesting. Gotta love that. So let's talk a little bit about that part of it, because we've kind of glossed over that slide in there about it being one of the headlines saying that buying at the wrong time can be costly.
Mm-hmm.
What are your thoughts on that?
I mean, I want to know why they think it's the wrong time, because I go back and I look at this slide where they're predicting for the next 5 years we're going to have appreciation. If you add up that slide, the estimated home price performance, they're basically projecting 2022 to 2026. It's almost like a 23, 24% in total appreciation is what they're looking at. I'm like, why would now be a wrong time? Just because of interest rates? Like, I think it's a great time because you're going to get the price at a lower price point. Even though you're paying a higher interest rate, you can always refinance.
And that there's a great part of it. Exactly. And the other thing that comes into it is, what if you bought at the absolute wrong time in 2007? Mm-hmm. At the very peak of the market? Are you in trouble right now?
No, if you're holding that property, it's going to appreciate. Like, I always go back to, that's when my parents bought. They sold last year and, made 50%.
So 50% in 10 years, that's not bad on your...
Yeah, especially, so even though it dropped and they were freaking out, they were holding, so it didn't matter.
So think about this concept. So just in their case, and I don't know the numbers or anything else, but I'm going to say, okay, what if your parents put down 10%? Mm-hmm. And they got a 50% return in a 10-year time period? Mm-hmm. It's actually probably 12 years, but math is easier for 10, so I'm just going to use 10. So they got 5%, maybe let's call it 4% a year, which would be 12 years, 48% is closer. Mm-hmm. 4% a year. If they put down 10%, that's a 40% annual return.
Yep.
Because they only put 10% down. They leveraged their money. Mm-hmm. They're probably pretty happy about that.
Oh, yeah. They were thrilled when they sold.
And they had a place to live. Mm-hmm. They had a place to raise kids.
Yep.
I'm assuming they were close to work and family and mm-hmm. security and all the real reasons that we should be buying a house.
Yeah.
So was it a bad time to buy, even right before the worst time in 100 years of real estate? Mm-hmm. Wasn't bad.
Not for them.
So think about that concept. Don't believe all this craziness, because still we look at the most important part of real estate. What is the very most important thing that you need to be concentrating on in real estate? Your family, mm-hmm. the reason you're buying, the location, right? It's not price.
Yeah, it all comes down to your life situation.
You're like, there you go. Speaking of life situations, should we throw this one in again?
One's slick as Gaston, no one's quick as Gaston. Gaston is the best.
Now, we did, I think Josh did get the extended version of the last clip in here for you, Mary. I think I got it right. Maybe I didn't. There it is.
There you go.
There it is. Congratulations to you. It's going to be an exciting week for Mary, and we're excited that Mary is with us, and enjoy, have a great time at your wedding, and all the fun and happiness of the world. So that's, and as always, we ask you, thanks for sharing a little bit of your time with us. Be sure to set that first radio preset button to come back here and join Ron Siegel Radio, where we only speak about items affecting your house and your bank account. Thanks to all of our sponsors. A big thanks to Josh and Sean for engineering us today. And of course, a special thanks to you for spending a little bit of your day with us. That's all for Ron Siegel Radio. Again, if you have any questions or to meet any of our guests, call me anytime. 800-306-1990, 800-306-1990, or ronsiegelradio.com. And remember, make a lot of money so you can help a lot of people and have a lot of fun. Have a great day. We'll talk to you next time on Ron Siegel Radio.